Okay, now let's start. Let's start. So today I told you I'll be teaching you about market market structure, particularly break of structure. I'm not teaching you everything on market structure, but particularly break of structure, and I'll be teaching you other blocks. I'll be teaching you other blocks. So you need to pay close attention because I'll be incorporating two topics in one, and I'll be giving you a strategy concerning what I've taught you so far: liquidity, break of structure, another block is a strategy. So then tomorrow I'll be teaching you imbalance and mitigation, and that will be all. But then next tomorrow, if you have any question, you can ask me. So that is what I'll be doing. So since today I'll be teaching you what to call market structure, that is break of structure. It's something you already know. Market structure in bracket, break of structure, and other blocks, identification of other blocks in the market. So let me go to the chart because I don't think there will be much explanation on that. So let's go to the chart. So first of all, I want to talk of market other blocks. I want to talk of market structure, in particular break of structure. So if I ask you, I know if you remembered all the teaching I've been saying, you can remember for sure. I told you for a uptrend, price is making higher highs and higher lows. For a downtrend, price is making lower highs and lower lows. So when we talk of break of structure is when there is a shift in structure. What do I mean? Okay, now price is making higher highs and higher lows. If price makes higher highs, when price breaks another low, that is what we call break of structure. Let me give you an example in the chart. Okay, let's go to the Euro USD. Let's go to the Euro USD. I'll try as much I'll try as much as possible. Okay now, we can see from this area here, this area that I'm navigating over. You can see this area here. You can see price went up from all the way from this place. Price went up to this place, then price came down, breaking this structure, breaking this low. This is just the simple definition of break of structure. This is a structure here. A low is a structure. A low is a structure. Consolidation, those support and resistance, they are structure. So anytime we get price breaking those structure, this is what we call this move here is what we call break of structure here. This structure here has been broken. Why? Because of this impulsive move down. Here you can see a break of structure here, even though it's as minute as possible, as small as possible. You can see price coming down, going up, then what, breaking, going down to what, break that structure. Because no matter how in smart money concept, I've told you, you can use any time frame. Any time frame is applicable in market structure. You can see price came down, gave a little structure here, went up, broke the structure. So this place now, this move, this 1 2 3 move, there is break of structure there, and this thing is very important in your analysis in smart money concept. Anytime you see a break of structure, it tells you continuation of a trend, tells you a trend is continuing, or a trend has started forming. Okay, now you can see from here we had a break of structure, breaking this structure. We came here, came down here, went up a little bit, broke this structure down. At this point now, okay, now you look, this point is a structure. This line here is a support level. Price broke it, so there is a break of structure. It's still a break of structure. This move down, this move here, from here to this place, is break of structure. This place is still another structure. This place is a high. So you can see that break of structure up to the upside, breaking this, breaking what, breaking this structure here. I don't know if you are understanding what I'm saying. Break of structure is very important in your analysis because it's one it and it tells you where the market is probably heading to. Okay, now we can see price moving up, breaking all the structure, came down to this point. As it came down to this point, price broke this immediate structure. If you look very well, you can see that this place closed is above this place here, this place here, this place. You can see that this place, this high, is above this high. So there's definitely a break of structure here. That is just a simple definition of break of structure. When any structure is broken, a higher high or a higher low is broken. That's what we classify as break of structure. You can see price now. This place now we classify this move down as what break of structure because this structure has been broken. So I classify this move down as break of structure. It's as simple as that. This impulsive move up, I classify it as what break of structure. Why? Because this structure has been broken to the upside. So that is just the simple terminology, simple I can explain. Okay, now this one was this thing. So there was this one was session break. A day session was ended. A day session ended. So that is why you can see this gap here. Okay, now you can see this impulsive move. We went down, but here there's no break of structure. Why? Because this was the lowest point form and there's price didn't close below the lowest point, so there's definitely no break of structure. But we can see this impulsive move here from this point to this point to this point, from this point to this point to this point here. You can see that this point, you can see that the wick is above this wick here. This week here, we can see that this week here is above this week here, so there's definitely a break of structure. When we are talking about break of structure, I want you to understand something. Break of structure deals with wicks and body. If you see a body breaking a structure, it's the break of structure. Even though it's the wick that just passed the high of that place or the low of that place small, but it went above that place, it's still a break of structure. Okay, so now you can see a break of structure here. Price went down, there's a minor structure here. Price went down, went came down, then can see another break of structure going down, can see another break of structure. So there is break of structure here, there's break of structure here, there's break of structure here, there's break of structure here. It's just the simple explanation of break of structure. Break of structure. If price is making a trend, if it's forming lower lows and lower highs, those lower lows those lower highs are being broken. That's what we call break of structure. And you need to understand break of structure. Why break of structure is important is that okay now, here now, okay, this is an uptrend. There is a break of structure here. So when price is at this point, I expect the price to come down, to rally down, but not break this structure. Since I'm looking for an uptrend, I don't know whether you understand what I'm saying, because you already know. I'm teaching you based on what you already know. You already know that in an uptrend, price is making higher highs and higher lows. And here now, for price to make higher highs, a high must be broken to form new high. If you get what I'm saying. So this high now, this high has been broken with this impulsive move here up to form what? To form another new high. So for an uptrend to continue, I know that price has to retrace down, then to break this high to continue my uptrend. Simple definition of break of structure. That is just the explanation I can give you on market structure, particularly break of structure. So next I'll be talking on order blocks. Order blocks are used for entry. That is just the simple definition of order blocks. And what is an order block? If you want to write it, if you write this down, another block is that, okay, let me use an example. In an uptrend, let's say price is going in an uptrend. An order block is that green, is that, let's assume your green bars. I don't know the bars you are using for green. Okay, now for example, now looking at this example in this my own chart, now you know that the blue bars are the uptrend, they are the one giving they are the bearish, the bullish candles, while the red bars are the bearish candles. So what order blocks means, that bullish candle, sorry, for an uptrend now, that bearish candle before that move up, before that impulsive move up, understand each terminology. That bearish move before that move up. Okay, now you can see that price is going down, price is going down, price is going down, price is going down. This was the lowest point of price, right? Okay, okay, let me know if this example is a little bit confusing. It's a little bit confusing. Let me look for an example. Okay, okay, let me go to the higher time frame. Okay, 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 now let me explain order blocks and you see why order blocks is very sweet here now. Okay, now here we are going in an uptrend now. Uptrend, price breaking structure. You can see price broke this structure here, came down, broke this structure. came down, the okay, made equal lows here, created liquidity here, then broke structure up up to this place. So what other block mean? Another block here is that my candles here, the blue candles are the bullish candles. So for this downtrend now, when price is here, if I want to mark my other block is that blue candle before this impulsive move down. That blue candle in this trend now, that blue candle before this impulsive move. And where is that blue candle? It's here. This is the blue candle here. This is the blue candle. This candle here, this candle is that blue candle. So this is my other block, and I'll show you why other block is very important. So this is my other block. This is my other block. It's as simple as that. And what can you see? You can see price going back to that other block. You can see why other block is very important. You can see price going back after price, after price, after price came down, broke structure up to this point. Price went back to that other block. Immediately he entered that other block. What did you see price do? Bounced back all the way down. You can see immediately price entered into my order block. What do you see price do? It went down swiftly. That is the importance of order block. Order block, they are block. Let me give you deep understand what order block means. Order blocks are blocks that are created by SMC traders to enter the market aggressively. To enter the market aggressively. That is the importance of order block. They are candles that orders are stacked by SMC traders. They are waiting. They are waiting. Immediately price enters into that order block, into that order block zone. Price will definitely divert. You can see. And what is another block? That for a downtrend, order block is that blue candle, that bullish candle before that impulsive, before the move went down. Before the move went down. And understand my words, because sometimes it can be very confusing looking at the chart. I say that is that bearish candle before that impulsive move. Before the impulsive move, that bearish candle is one candle. Other block is mainly one candle. Okay, now let me give you another example. Of another block. Let me give you another. You can see another other block here. I don't know if you are spotting it. In this place. You can see price impulsively. Price went up, created higher high. It didn't break structure. Finally, it broke structure here. This, remember, break of structure, came down, went all the way up. So the impulsive move down, my impulsive move down, my other block will definitely be this. That green can that blue candle before that rally down, and is this candle. So you mark it. And understand again, there are different ways to mark other blocks. You can just pick the body of that candle. Hmm? You can pick the body of that candle as in this. You can pick the body of the candle as in this. You can pick the entire body of the candle as in this. So that is it. I can see if price gets to that other block. Simple. What can you see? You can see price rallying down when it meets that other block. When it came down and met this other block, what can you see? You can see price rallying down, rallying down. That is the importance of other block. You can see price all the way from here. So once I mark this point as my point of order block, what do I need to do? And so if I can enter a pending buy order here, I will enter at this point. I will enter at this point. My stop loss will just be here. That will be my stop loss. And you can see, what can you see? How many pips from 1.18725 to 1.19025? I think is about 200 and something pips. And look at the time frame. This is 4 hours, so it's very high. And you can see the risk reward ratio. If I enter now at that other block, my next target will be here. So you can see my next target will be here, will be here, will be here, will be here, at this next order block, because this is another block. There is another block here now. There is another block here. There is another block here. Can see. So for an uptrend now, my other block will be that, in my own case now, that bearish candle in my own time, which is the red candle, which is this candle here. This candle is my red candle, so that is my order block. So I expect that when price gets to my order block, I should expect a sell. And what can we see here? Price just broke through my order block. Not all other blocks are valid. It's as simple as that. Not all other blocks are valid, so you need extra confirmation. So that is just the use of order blocks. For an uptrend, it is that red candle or that bearish candle before that move up. For a downtrend, it is that bullish candle. Notice the difference. Uptrend is red candle, bearish candle. For downtrend, it is bullish candle. So take note. And let me give you a very good example of another block. A very good you can see here, you can see here, you can see here, you can see here, all the way from this point. You can see price rallying down, breaking structure, breaking structure, breaking structure, breaking structure, then came all the way down, came all the way down to this point, came all the way down to this point. So how do I mark my order block now? Because looking at this place is a bit confusing. It's a little bit confusing, because you can see this impulsive move, you can see this impulsive move down, you can see this impulsive move. So what is that? Which candle now is that bearish candle before this impulsive move? Is this candle here? Is this candle? This candle? Is this candle here? This candle? Let me zoom in. Let me zoom in. Is this candle? Is this candle? This candle? Is this candle? See this candle I've pointed. This is my order block candle, because it's that impulsive move before this rally up. All these ones, they are just there, but this one is the move, is the candle that formed before this bullish move to the upside. It's as simple as that. And if you see, if I mark that place, you can see there's high probability of price going back to that place and bouncing back. You can see that price is already at that place, and you can see price reacting to that place. You can see price reacting to that place. This is a very good order block. You can see price reacting to that place. You can see, can you see? That is what I'm saying. Price will definitely be reacting to your order block. You can see, so that is my order block. That is my order block. That is the way to identify order blocks. And there are different types of order block. This one is one type. There's another block we call breaker blocks. A breaker block. Okay, let me give you an example. Take Write what I'm saying, or write what I'm saying. Write what I'm saying, because you don't expect me to explain back. What do I mean by breaker order block? Okay, I know you understand the term break of structure. Term break of structure. Okay, now let's take this candle for example. Let's take this scenario from this place, all this place. Let's take all this place for example. I want to explain breaker blocks for you. Okay, now you can see price came down here. So normally this red candle before this push up will be my other block. This red candle here, but you can see price just broke through. Price just broke through the other block and came down. So I will put an order here. I will indicate here. So this is a breaker block order block. So I expect price to come back here and bounce down, and bounce down, and bounce down. So that is another type of order block, the breaker block order block. The breaker block order block. That's another type of order block. But most at times, if I will even advise you, breaker block order blocks, they are not that reliable. They are good o, but they are only used for certain cases. They're only used for certain cases. The main order blocks, any and take note, you can't just place order block anywhere. For higher efficiency and accuracy, order blocks are placed at the beginning of an uptrend and at the beginning of a downtrend for greater accuracy. Why? Because normally, in the way forex market, I don't know if I've told you this, SMC traders, normal investors tends to buy 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 things when price is at the lowest point, and they tend to sell when price is at the highest point. It's normal mentality of investors. So if price is very low, investors tends to buy things at that point, and if price is very high, investors tends to buy things at that place. Let me give you a I think I'll be done with my lesson for today, because I think I've explained enough on order blocks. Order blocks and break of market structure, I think I've explained enough. Order blocks is that candle, is a candle for a downtrend now. For this move, this impulsive move down, down, down up to this point. My order block now, my order block will now be what? Will now be my order block now will now be what? My order block now will now be this candle here, this candle, this green candle, this top green candle, this top green candle. That will be my order block. So I expect if price gets to this, anything that will make price get to this point, price will definitely push it down. So if I'm setting my stop loss, my take profit, so this that gap, I will enter at the lowest price, and the up price, that is, I will enter at 1.22115. That will be my entry point. My stop loss will now be at 1.22645. So you can see that the difference there, because this is a daily chart. This is a daily chart, so the difference is very high. As much as you can do this on a daily, you can do this on a 1 minute time frame. Let me go to the 1 minute time frame. Let me go to the 1 minute time frame. Let me go to the 1 minute time frame. Let me go to the 1 minute time frame. Can see, can see, can see. Look at imbalance. You can see this place. Can see this place. What the price do? So if I want to mark my order block now, if I want to mark my order block, I want to mark my order block now. So this move down, this move down. So my order block will be, where is that candle? That green candle before that move down. So this is my order block. This will be my order block. This will be my order block. This will be my order block. So that will be my order block. Now can you see? Can you see? This is on the 1 minute, yo. Can you see? Can you see what the price do? Immediately, and immediately entered that order block. What can you see? You can see rejection, and you can see the way it rallied down. The way it rallied down. And what is the difference from 1.10887 to 1.10901? It's just a difference of maximum 30 pips. Can you see how interesting order blocks? I think it's 20 pips. 20 pips. And can see where price rallied down to. Can you see? Can you see? Can you see? Can you see? Just from that place, just from that place, just from that place, you can see the power of order blocks. So as much as you can apply this on higher time frame, you can apply it on a 1 minute time frame, and it will work, because other blocks begin from 1 minute. Don't worry, when I teach you, when I finish the last day, I'll spend time explaining different things for you, different scenarios, so you'll get what I'm saying. So that is just the concept of break of structure. I've told you break of structure. If price is making higher highs and higher lows, they will definitely, the higher highs need to be broken for that trend to continue. So if a higher high is broken, that impulsive move to that higher high is what we call break of structure. So I think now I told you I'll be giving you a strategy. 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 So it's a very simple strategy, and it works perfectly well with the three things I've taught you: break of structure, order blocks, and liquidity. And let me give you this presently ongoing live trade. This is a live trade. This is a live trade. Okay now. Looking at the daily, let me remove everything so you get clear understanding. Looking at the daily chart, since 17th April, since at this point 17th April, this was where price formed the lowest point here. This was where price formed the lowest point. So if I want to pick my order block here, I want to pick my order block here, I will mark this point. My order block, I will mark this point. I will mark this point. I will mark this point. I want to give you a this thing. I will mark this point. I will mark this point as my order block. So, and the strategy is very simple. Why I taught you break of structure? For you to do any strategy on SMC, you must see a break of structure. And is that order blocks that instigated that break of structure. It can be any type of break of structure, but the order block that instigated that break of structure, Those are the type of order blocks you'll be looking for. If you look here, this was at the lowest point of the trend. This was at the lowest point of the trend, quite alright. Yes. Okay, now did this lower trend broke structure? Yes, there's a break of structure. There's a break of structure here. If you look, there's a break of structure from this plane, from this point, from this, we got this move up from this point here, we got this move up. Let's see, let's see whether it broke structure. Let's see, let's see. Is this place higher than this place? No. So this order block is not valid. This order, remember, this is the impulsive move that took the, if you look very well, this is the move, this move that took price very high to this place. There's a red candle here, but I will not use that red candle. Why? Because that red candle didn't break structure. This red candle here, it didn't break this structure. That is why I will not use it. There are different ways. You see your order block, that order block, that is that red candle that instigated that move, that impulse move, that quick move up, must break structure. It must break structure for you to continue. Okay, now you can see here, that this red candle here, when price will leave the red candle, you can see it broke this structure, broke this structure up to this point. So this my order block here is valid. My order block there is valid because why? There is break of structure there. There is break of structure there. So that my order block is valid. So what am I expecting? So I'll leave that. So anytime price gets there, you can see price rallied up, rallied up, rallied up, rallied up, rallied up, rallied up. Then what can you see? Price finally coming down, coming down, coming down. And what can we see? You can see price at my order block. So the next thing now, so check number one, condition number one. I've told you how to use this thing. I've told you how to use uh, how to get your strategy. So this is a strategy. Condition number one, order block formation. My order block must break structure, and my order block must at least be at the lowest point of that trend. You can see that this is a trend. You can see that this is a trend. You can see that this is a trend. This is a trend. This is a trend. This is a trend up. So that order block at the beginning of the trend. Any here at this point now, I can't be looking for other block. There's another block here. Yes, there's another block. There's another block here. Yes, but I can't look for this other block. Why? They are already far away from the trend. So I'm looking for that other block at the beginning of the trend. You can see here. You can see here. This was a downtrend, or it was a downtrend all the way from here, price coming down, coming down. It was at this point now that price begin to rally up, and we can see what can we see? We can see this red candle before that move up on the daily chart. You can see. So you can see. So that is my condition number one. Your order block one must be at the lowest point of that as possible. So what we do normally, because we can't there are sometimes we can't actually estimate. So our order block must fall between the 70 and the 88% Fibonacci. If I carry my Fibonacci tool now and draw from here, if I carry, let me do it, my Fibonacci tool, and draw from the beginning of Fibonacci retracement and draw from this point up to this point. This was the high of the trend. You can see that where is my order block? My order block was at what? Look at the 70-point mark. Look at the 70-point mark here. Look at the 70-point mark. You can see it was below the 70-point mark. Here should be around the 80 something point mark. You can see it fall perfectly there. It fall perfectly there. So I'm telling you that this trade, I'm going to take it. There's a trade here that I'm going to take. I'm going to take this trade. I can see that the trade will come. So you can see that my order block and this are already valid. So what am I looking for? If you remember yesterday, I taught you about liquidity. I taught you about liquidity, if you've forgotten. And what did I tell you? I told you that liquidity is used as confirmation. Liquidity is used as confirmation when price manipulates. When price manipulates. Okay, now you can see price came here, rallied down, rallied down, rallied down all the way here, went back, rallied down. Now you can see price created liquidity at this point, 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 created liquidity at this point. But that is not the type of liquidity you are looking for. Understand the concept. I told anytime let me give you this tip. Anytime you are looking for liquidity, liquidity should be close to your order block. at most times, especially when you are looking for support and resistance liquidity. What is the name? Consolidation type of liquidity. Your liquidity should be very close to your what? To your order block. Why is that? So that there will be manipulation. So it will give you confirmation that yes, SMC traders are in this place. They are at work here, because they will create order block to manipulate, to confuse the retail traders, to make money off the retail traders. It's as simple as that. They will be use order block to manipulate the retail traders to confuse. And let me show you one manipulation here. At this point here, you can see a trend line liquidity here. You can see a trend line liquidity here. You can see a trend line liquidity here. I don't know whether you're understanding what I'm saying. So as a retail trader now, once you begin to see this trend line, you know, as you can see a trend line liquidity here. As a retail trader now, can you see? As a retail trader now, let me explain. Let me use this concept to explain why this thing is very is. I'm 70% confident of this entry. I'm 70% confident of this. This is a live trade. I'm 70% confident of this entry. Let me show you why this is a very good liquidity. Okay, now you see price. I'm teaching you what I've taught you yesterday. You see price coming. Price was making lower lows. Came here, came here, came here, came here. You see price now staggering, creating what? If I go to the notice the daily time frame, take note, understand. I've taught you how to use time frames. So if I go to the 4 hour, what can you see? What can you see on the 4 hour? You can see price was what? Was making higher, was consolidating. So normally here, people will buy here, sell here, buy here, sell here. That is it now. If you understand, people buy here, sell here, because they believe this is a trend line. So at this edge, they'll buy. At this point, they'll sell. So what do you see price do? Manipulation. So people now, there are orders at this place now. When price was at this place, they're spending orders here, that if price get here, buy will buy. Price get here, quite alright, price buy. There will be sell orders at this point, pending sell orders, sell stop. There will be enough stop loss here, because if people sell here, their stop loss might just be just above the trend line. That's what we call trend line liquidity. Just above this trend line. What do you see price do? Price took out, ate all the stop loss. All this high here, there will be stop loss here, there will be stop loss here, there will be stop price. What? Ate all of them, then came down. There's something we call, if you can remember, there's something we call break and retest trend line entry. That is, if price breaks a trend line, price will retest that trend line to go up. What do you see price do? There is trend line liquidity here, there is support and resistance liquidity, there's higher high, higher low liquidity here. What do I mean? Okay, now we can see here, price just broke through this high, this previous high here, this previous high. You can see price just broke through this previous high. So we expect price to come back, retest that previous high, then go up. What do you see price do? Manipulation. Price came down, staggered, as if it will retest, then fall through. So those people that waited for entry at break and retest for trend line, though it would have eaten their stop, because their stop loss will be here, because they entered price to go up, come down, retest to go up. So their stop loss will be at this point. So price have ate their stop loss all the way down, all the way down. So this is what we call liquidity. That is what we call liquidity. So liquidity has happened there. I don't know whether you are getting me. Another liquidity you can see here again. Another liquidity you can see here again is this liquidity. There is a liquidity here. There is liquidity here. This low here. So at this point, people will be entering buy order. Price took out that liquidity, rallied down up. So what will people be expecting as a retail trader? To come here, retest, then go down. Watch and see. You see I said so. Price will come here, come and see you want to retest, break up and continue up. That is the simple concept of liquidity. You can see how the SMC traders are moving the market. They will be eating stop losses, eating retail trader stop losses. Common trend line, you see break, if price breaks through a trend line, price will come back, retest that trend line, then go up. So that is it. So what I'm expecting here is just for price for price to give me a confirmation entry. And what is confirmation entry? Confirmation entry is an entry. So I'm looking for confirmation entry. So just what I'll do, I'll go to the lower time frame to look for confirmation entry. This is the 4 hour. If I go to the 1 hour, and what am I looking for in my confirmation entry? I'm just looking for that break, and that break of structure, that order blocks that form that break of structure. It's as simple as that. That order blocks that form that break of structure. Notice we are in our daily order block zone. If you remember, if I go to the daily chart, this is the order block. This is the order block. We are in our daily. Let me delete all this. Let me delete. You can see. Look at what I was telling you again about liquidity. Look at, there's a low here. This is approximately a low. So price took out all the stop losses that were here. Then retail traders will be expecting price to retest here, then go down. Price will not retest, so price will break all the way up. Then price must stagger here because there is other block here. Staggered here, then push up, hitting all the orders that are here, all the orders that are here, that are here, that are here, that are here, hitting them up to meet this order block here, then probably pushing it down. That is it. That is it. That is just the simple concept. That is just the simple concept. So that is it. So what was I saying? So now I've gotten my check one complete. What is my check one? Order block at the beginning of a trend. Order block plus break of structure on the daily time frame. You can do it on any time frame. You can do it on any time frame. You can do it on any time frame. Normally I can just come. I've marked my order block. I'll just come here and set pending order. I'll place a buy order here at this first line at 1.09494. My stop loss will be at 1.08825. But why is that? Is that I want more confirmation, and I want to reduce my risk reward ratio. Confirmation trade helps in reducing your risk reward ratio. I can just enter a pending order and you can see what the price do as it entered that zone is what is going up back, is going back. So see, how do I get my confirmation zone? Remember I told you order block at confirmation, condition one complete. Condition two, I must see liquidity formation. I must see SMC traders in that place, and we can see that in this place here, in this scenario, trend line liquidity being taken out and there is manipulation in the market. Those that entered here took their liquidity. Those that were expecting it to come back and retest that trend line, the trend line, it took price took the liquidity here up, took it down again, as if it will retest the liquidity again down, just to take it up again, eating, because there is stop loss here, 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 there is stop loss here. So price ate like 5 stop loss, made money. SMC traders made money here, then pushed the price down here. So people were expecting, retail traders were saying break and retest. That is just the simple concept. Retail traders there were expecting break and retest. So that is it. So condition number one, my order block and break of structure on higher time frame has been checked. Condition number two, my this thing has been formed. My liquidity has been formed close to my order block, checked. Then what is my condition number three? Condition number three is entering of the trade, confirmation entry. So in my confirmation entry, I go to the lower time frame. Let's go to the 4 hour. If we can see anything, we can't see anything in the 4 hour. We can't see anything in the 4 hour. So we'll go to the 1 hour. In the 1 hour, we can't see anything. So we'll go to the 30 minutes. 30 minutes, we can't see anything. So we'll go to the 15 minutes. 15 minutes, we can't see anything. Go to the 5 minutes. 5 minutes, so we can't see anything. 5 minutes. So 5 minutes. What are we looking for? We are looking for the same scenario that happened. Condition number one. That's what we are looking for. Starting from condition number one in our confirmation. So what is condition number one? Condition number one is what? That order block. So I'll be looking for an order block in an order block. This is a strategy. When you master it, you understand what I'm saying. I'm looking for an order block in an order block. And if I look here, that order block that broke structure, that order block that broke structure was this order block here. Was this okay? This was the highest level of structure. You can see this move here. You can see from this point, price rallied up to this point, creating a high. So that high now, that high is my what? Is my higher high. Notice I'm looking. See, what am I looking for? To buy. So I'm looking for that thing that will cause that break of structure that will enable me to buy. It's as simple as that. So price will come here. So I'm looking for that blue candle that will cause that break of this structure, and it's this candle here. Sorry, I say that blue, I mean that red candle, sorry. So I can say is this structure here, is this structure here, is this structure here, this very big candle on the 5 minute time frame, on the 5 minute time frame, is that very big candle. If I don't want to use the 5 minute, I can go to the 1 minute. I can go to the 1 minute. In the 1 minute, I would have already even entered the trade. In the 1 minute, eh? In the 1 minute, you can see, you can see, price came here, created a structure. This is a structure. I told you the analysis on any time frame is no matter how small the structure is a structure. You can see a structure here. So I'm looking at, so this will be my order block. The red candle before that structure, which is this red candle here, that red candle. So what do I expect price to do? Price to come back to that red candle. And what can you say price do? Price went up, came down to that red candle, then push price up. Then price broke through the red candle. So it's not valid. And I want to ask, I probably did this. I want to ask you, why is it not valid? It's not valid. Why? Because it's not at the lowest point of that trend. It's not at the lowest point of that trend. The lowest point of this trend was at this point. So I'm looking for that other block at this lowest point. And where is the other block? This is the other block. Don't get yourself confused. Don't get yourself confused. Other block work effectively when they are at the lowest point. You can see that this other block, it held this other block as price came down. Price bounced back off the other block, but you can see price breaking the other block because the other block is not strong enough. The other block is not strong enough. But you can see this other block. 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 What do you see price do? Immediately price tapped into the other block. Immediately price entered into the other block. You can see price moving away from the other block. You can see price. And I want to make you understand some all these things I've taught you, go back and practice them. Price moves from other block to other block. Price moves from other block. This is additional. If you can see this break of structure, you can see that this is a break of structure. This is a break of structure. There is another block from this is my other block from here to let me give you an example. Price moves from other block to other block. Okay, now from this point, from this point. Okay, let me add it. From this point, from this point, you can see that break of that. Okay, let's take from here now. From here now, you can see that break of structure. So my other block now will be here. That red candle before that impulsive move is this candle here. Is this candle? Is this red candle? That red candle here. You can see what the price do. What the price do? Price went up. Then price didn't break structure. So this other block is invalid. You can see price went up. It is now this other block that broke structure. Is this other block that broke structure. Understand the concept. When placing other blocks, there are factors you must consider. Number one, you must consider break of structure. Break of structure. You can see now this other block, it was at the lowest point, but it didn't break this structure. This was the immediate structure. It didn't break it. It didn't break it here. To confirm that we are in an uptrend. Break of structure is just like a confirmation of a trend. If there is a downtrend, if price is making downtrend, that is price is making lower lows and lower highs. So if I want an uptrend to continue, that is my lower lows and my lower highs needs to be broken to form higher highs. Okay, now here now we got this we got this move up, this move down. So if I want to continue this uptrend, this structure needs to be broken, and it wasn't broken. Can you see the fact that it wasn't broken pushed this thing down? So if I want a downtrend to continue, you can see this is a break of structure. This structure here broke this structure, confirming my downtrend. But if I want this downtrend to continue, price should go and meet another block here, then break this structure. If it breaks this structure, that means my order block here is valid. Okay, now going back, we can see this one didn't break structure, so it's invalid. This the other block here is not valid. So price came down, we trace back. Then this impulsive move here, this move here broke structure. It broke this structure, broke this structure, broke this structure. Can you see? Immediately price touched into this my order block. Can you see price bouncing away from my order block? And this move here broke this structure. So giving me this order block, giving me this order block. This was the beginning of this move that broke the structure. This was the red candle. Can see price entering into my order block. And what can you see price doing? Bouncing up to my entering my order block, bouncing up. So all these places I can be moving. Sometimes most SMC traders, what they do, they don't set take profit. They move from order block to order block. So if I see now here, price didn't meet my order block, cause this break of structure. Can see price rallied, and it's still going up. Here, price didn't even meet the order block, rallied up. So that is what you are saying. Price came here. The scenario I'm explaining for you doesn't happen all the time in the market. Market is not 100%. There are sometimes price will not go back to your order block, just continue. Okay, now you can see here, this move here broke this structure here. This impulsive move here broke this structure, came down. So I'm expecting as an SMC trader, price to come back to this my order block, then go up. But price didn't came down. What the price do instead? Just came up, came down, or broke this my immediate structure here. So I expect price to come back to, and what can you see price do? Went back to this my order block. This on the 1 minute too went back up. So I can't take this as another block. Why? Because it didn't break the structure. Instead came down, still respected that order block, went up. Still respected that order block, went up. It went up. This other block here now broke this structure, broke this immediate structure, broke this immediate structure. So it is valid. Can you see the importance of other block? So that red candle before that impulsive move is this candle here. Is this candle? Is this candle here? Is this red candle? Can you see? Price entered that candle. Can you see the wick? Can you see the wick? Can you see what I'm saying? The wick just crossed below the candle, below the candle, just touched it, immediately touched it. Can you see that break up? So now what am I expecting? This is a live trade. This is live trade. So you see it, you can see this impulsive move. There's a break of structure. There's a this structure was broken. This structure was broken. So what am I as a trader? What am I expecting? I mark my order block. I mark my order block. So this is my order block. So if price enters this my order block, this is a live trading. So I'll do it in your face so you see it. If price enter this my order block, you enter a buy order. Why? Because why? There is a break of structure. There is a break of structure. There is a break of structure here. So I explain, and this was at the lowest point of this trend. So, and take note, this order block I'm teaching you is used when you are already in a trade. It's used to move your stop losses up. So let's assume I've entered the trade at this point, from this point here. Remember, this was the starting. From this point, my stop losses would have already been above my sell order. My stop loss would have already been, I'm already in profit, and I'm still going in profit. I'm still going in profit on the 1 minute time frame. On the 1 minute time frame. On the 1 minute time frame. You see the Euro USD. So generally now I'm expecting on the 15 minutes, you can use any time frame. On the 15 minutes now, there's a break of structure. There's a break of structure. So I'm expecting price to get back to this point, to get back to this point, to get back to this point, to give me an entry. So that is when I will enter the trade. Live trade. This is a live trade. This is a live trade. That is when I will enter the trade. This is when I will enter the trade. So you can see the importance. But those that used 1 minute time frame as confirmation, they would have entered the trade already. They would have already been in profit. You can see, you can see, you can see, you can see. Let's go to the 1 minute. can see price has not got into our order block. So we are waiting, we are waiting, we are waiting. So that is the importance of order block. And you can see what I'm telling you about liquidity. Liquidity happens everywhere, 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 everywhere. Once you get the concept, it's over. Once you get the concept, it's over. What can you see here? What can you see here? You can see that here now at this point, before price enter this my order block zone, price started stagnating at this one, forming what? Support. Why is it forming support? So that if people, there are buyers that enters or that trade scalping, so they, if they are seeing this support now, they will enter buy order. You can see price hitting the market, entering our order block, which was at this point, then going up. It's as simple as that. Liquidity add extra confirmation to your trade. What can you see price doing? Price has started forming something like equal lows here at this point. At this point, price started to consolidate at this point, consolidate at that point, consolidate at that point. So it's as simple, it's as easy as you will say it. That's easy as you will say it. It's as easy as you will say it. Here I can still enter a sell order. I can still enter a sell order. Because why? There's another block there, but that is advanced. You will be confused if I teach you that. So that is just the simple concept of order block. That is just the simple concept of order block. That is just the simple concept of order block. That is just the simple concept. I want to show you this order block now. So let's see. This is a live trade. 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 And see price going to our order block. Let's see whether price will break our order block or if we rally past our order block. Let's see. This is a live trade. So that is what I've explained for you. You need to understand concept of liquidity. You need to understand concept of order block. You need to understand concept of break of structure. Break of structure. BOS. Break of structure. Once you consider impulsive move down, consider impulsive move down, consider impulsive move down, consider impulsive move down. So that is how you explain order blocks. That is how you understand order blocks. You can see now, if I enter here, I will enter at 1.092504. I will enter a pending buy order. So if price touch my zone, you can see price have touched my zone. Let's see whether price will break it. You can see, and if price eventually breaks my zone, 1.09241, the loss there, you can see price has broke my zone. Price broke the zone. That is okay. Order block was not valid. Order block was not valid. Order block was not valid. Can you see? Can you see? Can you see? Can you see what I'm saying? Can you see what I'm saying? Order block was not valid. Quite alright, yes. Order block was not valid. But as an SMC trader, if your sell your this thing will just be at the low, then you can use ATR to wedge it. Can use ATR to wedge it. But nevertheless, price broke through. Price broke through. No problem, no issue, no issue. So as I've told you before, we just used order block as means of how will I put it? As means of entry. It's just an entry pattern, nothing else. Like double top and double bottom that you know. It's just an entry pattern, nothing else. So once you understand concept of order block, break of structure, and liquidity alone, I've not even talked to you about imbalances in the market. You understand, you know how the market moves. You know how the market moves. You can here again we can see liquidity here. Oh, you can see liquidity here forming off these order blocks. You can see a trend line liquidity. You can see a trend line liquidity. You can see a trend line liquidity here. Buyers will be entering. What do you see price do? Took out all the liquidity. Took out all the liquidity. So if I'm looking for order block, I'll be looking for order block that is close to the liquidity. That is close to the liquidity. That is close to the liquidity. I can see this order block here. You can see this is on a 1 minute. Oh. So there are different ways to analyze. There are different ways to analyze. You can see price breaking all this. So I expect price. So normal retail traders now will be expecting as price has broke this trend line, price to retest this trend line to go down. Just such as see. Price might not retest, might break this thing, gets to this point, meet this other block here, because this other block created imbalance. I'll be explaining that in my created imbalance. Then my get to this point, then push the market down, then from here it push the market up. That is just simple concept, simple concept, simple concept of order blocks, simple concept of order blocks, simple concept of order blocks. It's just as simple as that. But overall, I'm looking for buys. 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 Why? Because on the daily time frame, that's met my daily OB. On the 1 hour, I'm just looking for that break of structure. It's as simple as that. I'm looking for that break of structure. That break of structure. And I've already got I've told you normal 1 minute they would have entered, and their stop loss would just be at the low of the daily order block. 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 So that is just the simple concept of trading order blocks. Simple concept of trading order blocks. Order blocks. Can you see what I'm saying? Those that are doing break and retest now, can you see? Can you see? It's as simple as that. Those that are doing break and retest now, they would have stopped them out. I told that it works on all time frame, all time frame, all time frame. So those that are doing break and retest now, it have stopped them out. It have stopped them out. So I think I'm running out of time. I think I'm running out of time. I've done enough. I've done enough. The this thing has stayed long. So once you understand once you understand the concept of other blocks, you will know how to trade them. Just if it's to go and watch other YouTube videos to get better understanding. I think that will be all for today. Thank you very much.